Okay, welcome everyone. Let's get right into the stock market technical analysis. I'm going to put out an early morning video today, and I'm going to try to get one out at the end of the day as well. I've been out for the last 2 days, down on vacation, and I'm back, so ready to get into the charts. Let's get right into it, guys. Okay, triple Q. So this is tech sector. Again, this is our market leading FANG stocks for the most part. So we want to, you know, while analyzing the Qs, you do also want to keep an eye on those big FANG stocks, Microsoft, Apple, Amazon, the big players. All right, very important. Now, triple Qs, all I'm still seeing today is continuation of what looks like a bear flag. Okay, so we've got a flag pull right about here. It really started back here January 22nd. We have the flag, and we broke to the downside of that flag. Here's a nice impulsive breakdown. Now, the last two days, little counter trend rally, kind of hanging out there today. But to me, it looks like we're going to continue this flag. And really what you want to do to measure this is probably put it right about there. That would be about where the flag broke. And it's, again, projecting us to head down to about 316. You know, we have a support level right in there as well. So that still looks good to me as more downside comes. That's going to be a good size move. We'll probably take a breather down there. From where we're at right now, that's still another 10% down. So, yeah, that's definitely going to be a good size move. And from the all-time highs in Qs, that will be 22% down. So a bear market territory officially. Okay, so we're looking for that. Still don't have any, still don't have that continuation to the downside yet, but we're waiting for it. On the short term, if you look at the hourly chart, we got a little bit of support right in here, about 352. You can see that was, you know, a little bit of support here. So we're kind of chopping around this area. I would expect the next move when we continue down, or if we're going to continue down, to be pretty impulsive. So until then, we'll probably just kind of battle it out around these levels. All right. Again, on the daily chart, this rally that we recently saw up here was a counter trend rally as far as I can tell, because we had no bullish divergence. We basically had bullish momentum, okay? You know, just basically momentum moving higher and price pretty much moving higher right there. So that is just a counter trend bounce or a dead cat bounce as far as I can tell. Now, to find a bottom, what we typically are going to look for is divergence. We're going to look for momentum starting to move higher as price is moving lower. Okay, that's going to give us an indication that we're likely going to see a bottom in the move down. So I don't see that yet. I still see continuation to the downside. The short trades are still working out nicely. Again, if you've been following me for a while, and I'm kind of cleaning my chart up as I go along, but I shorted triple Qs right here on January 4th. Okay, we sold all the way down. I did flip long down here at the bottom, caught a little bit of a long trade, and then flip back short, and the key entry for the short was right there on that day, February 2nd, as we rallied right into that major resistance on both the SPY and the triple Qs. Again, you want to align, if you're looking to trade the indices, you want to align the SPY and the triple Qs typically, because to see them both move down, you know, you need them both to be at key levels. All right, and so if you're going to trade Qs, that's great, but you definitely want to make sure the SPY is breaking its support or back testing into major resistance. You want it to be around a key level, and it was on this day. But there it is. That was your back test, and then from there, it's been down ever since. Even when we rallied up here, we weren't able to make a new high. So we are. And then nice impulsive breakdown. So as far as I can tell, continuing to the downside, whether we head there today, this week, or next week, I don't know. But looks like that's what's going on. Looking at the SPY here. So again, SPY, okay, there we go. I had to clean my chart up a little bit. SPY, same pattern, bear flag. So you've got the flag pull, you've got the flagging action, and then you've got the nice impulsive breakdown out of the flag. Little bit of, we're kind of hanging out there today, but again, we should continue lower. Target on this one's about that 409, 410 area. And with a lot of momentum on the way down, we might overshoot these and run down to the next level of 400. Okay, something to look for. The other thing that you'll want to notice on the SPY is if you look at the weekly chart, again, it's important to flip out to the larger time frames to get the bigger picture. Coming off your 2009 lows, here's your bull market over the last decade or so. We broke bullish trend in 2018. Fed started cutting rates and pumping the market. We ran right to resistance of that trend line right before COVID. This is your COVID drop. Fed, again, started pumping the market. The Fed was able to recover the trend, but what they've done is created massive inflation. So, and we kind of have a little bit of runaway inflation right now because it might not seem like a lot, but we're moving at about 0.5% in a month. And, if we continue on this trend, I don't know if we'll continue on the trend, but if we continue on that trend, believe me, it will feel like runaway inflation when you're up in the 20%, things like that. So that's all I'm saying is the rate of change moving higher is pretty drastic. So, and so the Fed's kind of handicapped right now. They don't have the ability to pump the market. So likely if we head lower, the Fed's not going to be able to just save us. All right. So that's why we're looking to short this market. And yeah, I'm looking for more downside. So that looks fine. IWM, small caps, we are rallying right into major resistance. So let's go back to the daily on this chart. Okay, so big sideways trading range right here. That went sideways for about a year in the small caps. And we finally broke to the downside. And you can see we're really just backtesting resistance. So, anywhere right in there, that was resistance. This is major resistance. It's about 208, 209. Any kind of tags into that will likely run into a wall of sellers. And they could even step in early. I mean, we hit it already once right here back on February 10th. So maybe that's all you get. And then we're going to head lower. As far as I can tell, this also looks like a bear flag pattern. So I've kind of got it marked out, but there's your flagpole. And we're kind of flagging right here, and then you break to the downside. I really think it's setting us up for a move down to about this 170 area, and that's what I'm anticipating here in the future. Yeah. Okay, gold. So we do have a breakout in gold. And it is doing what I've been talking about. I've been talking about this potential breakout for months. We've been building positions, at least I have personally, in gold mining stocks for quite a while, for a couple months, and so far so good. So here's gold bullion. You can see we had this wedging pattern. I've got it all kind of marked out. I know this looks like a mess, but the point is you want to watch this top upper trend line here. That was the top of your triangle. And then the bottom trend line is your bull market trend going all the way back to 2018. So see it right there. We're walking up there. And we started coiling, compressing within this triangle. And then boom, breakout. Not super impulsive, but, I think we'll see. We'll see what we get out of this. It is a breakout. I'd like to see it a little more impulsive. We did have 2 days of pretty impulsive buying, a breakout with confirmation right there. So I could say that's good. And then yesterday, it looks like it came in for a back test. So you can see yesterday, way up here, sold all the way down, back test the trend line, held support, bounced off that, and rallying. So as far as I can tell, it looks like a breakout, back test, and we could back test for a few more days or weeks, whatever. But, off to the races we go, I believe. And then looking at some of the larger miners like Barrett Gold, this is one of my largest mining positions. And I talk about this one all the time. It had the same pattern where we basically were creating this triangle, compressing, and the pattern's one thing, but the other thing to notice is the momentum started building bullish divergence. See the momentum, how it's moving higher right there on the PPO, and the RSI was kind of flatlining slightly higher. As prices kept moving lower, each new low was a divergent low. That was a let me grab the right tool. That was a divergent low there. That was a divergent low. So each one of those lows had a high probability of not going much lower and reversing and going to the upside. And those divergences, those bullish divergence, were telling me, sorry, I don't know if I said negative divergence, but it was bullish divergence, were telling me that prices had a high probability of breaking out to the upside. And there you go. There's your breakout. So we got the breakout. you know, really the last couple days, that is a breakout. We did a back test, held successfully. All the traders see that successful tag and test, and boom, off to the races she goes, up 6.5% today. And it doesn't look like we're, you know, looks like we're pretty much putting that triangle behind us now and moving to the upside. I think it's obvious to all. So now we'll start looking for levels of resistance. But honestly, I'm not too interested. You know, we could maybe gain little pullbacks here and there, but this is a big consolidation triangle for over almost 2 years now that this has been consolidating and moving to the downside. So gold has had a correction within an ongoing bull market. It's had a nice consolidation, and from what I can tell, it's probably going to be a pretty impulsive move to the upside as we continue the bull market. So I am ultimately looking for breaks above this last high of 31.32, and then most likely I would say we're heading up to the all-time highs at about 55.87. All right, those were put in back in 2011. Big resistance up there. So you can see we've got, you know, lots of tags of that. That's our major resistance level. So I think we're probably going to make a move all the way up there. And then we'll probably get a pullback. You know, the initial tag of that level, given that it's big resistance, we should get a pretty good sized pullback. That pullback will likely be a buying opportunity. So we'll look to probably exit our Barrett Gold position up here. And then buy it back on the pullback for a break to new all-time highs. Okay, I'm going to go through a bunch of short trade ideas I've talked about. We're going to just cover those, give everyone kind of an update on those. IYR, this is real estate, very interest rate sensitive. Interest rates are likely going to rise. The Fed has to raise interest rates, guys. I don't know how high they can go, but I think it's very likely. Like I said, they're going to raise. They're trying to walk the markets down. While being able to raise interest rates a little bit. They need to do something to try to at least posture like they're trying to fight inflation. So it's pretty much guaranteed that they're going to raise interest rates. And who knows where the market's going to break. I think it is very obvious that the market is propped up by cheap interest rates, low interest rates, and QE. So as they raise, they're going to try to not break the market, but the Fed's pretty much reactive. You know, the market will break and then they'll react. That's most likely. So, again, IYR should continue lower. So what we got on IYR is a clear uptrend line coming off your March 2020 lows right there. Up near the highs, we had negative divergence that was started to build. We looked for a break of trendline support, which came basically right there. That was your sell signal. And as far as I can tell, we've started a downtrend. So we fell down to this level of support at about 101.65. That's good support. You can see we had, you know, 3 reactions there. So that initial tag, we got a bounce up to the 200, failed. We're back down at that level. Should break this time. We could maybe chop sideways a little more, but one of these days it's likely going to break. And we'll head down to the next level of support, which is, there's a 100 little level of support there. I think we're likely going to go down to this area at about 90, 89, 78. And that's probably going to be where we'll pull this one, right down there. So still looks good for more downside on that one. All right, NVIDIA. So NVIDIA, little counter trend bounce is probably going to fail right about here, but you can see that we have a bear flag pattern where we have created a flagpole. Here we're flagging out, broke to the downside, little counter trend bounce. It should roll over here. We'll see. And I still like this for more downside. The other key level to look at is this major support level coming off your March 2020 lows. You can see we held support all through here. There's support. And so we could run up and do a back test, maybe up there at around 280 or so. And then maybe that's maybe that'll be the end of this counter trend rally. But as far as I can tell, it is just a counter trend rally. See the negative divergence? We were just moving lower. So this was all, right? This was your last divergent high. Then the momentum started dropping off. And it looks like we're going to just make a series of lower highs and lower lows. And that's what we're doing. Here's a low, lower low, lower high. So even if we run up to here, it'll be a lower high. And we're in a downtrend. Okay. So target, I think the long-term target on this one, this has a ways to fall. I mean, there's all kinds of major levels down below. If I look at the weekly chart, you know, here's your long-term bull market on NVIDIA all the way down here. This is back in 99. Look at all these key levels of support. So if NVIDIA really wants to run into some trouble, we could head all the way down to this, you know, $15 area and just hit that, you know, that long-term bull market. That would be a bear market in the markets. There would be a lot of damage across the board if we were down there. But again, that's probably would be a key area to be buying this stock. So I don't know where it's going to go long term, but we'll watch key levels. There is some support right here at 126.82. So moving on. Okay, GameStop. GameStop, looking at the daily. Again, this was a momentum trade where you had all the momentum traders, the Reddit traders, running a short squeeze. That's done. All right, I don't see that continuing. So a lot of the early people in the short squeeze that was engineered, they're out of the trade. They've taken their money. They're buying yachts. They're loaded, you know. And then you've got pretty much the bag holders, the retail money who's just thinking that, you know, thinking the trade's still on, but not realizing that it's broke. So on this one, big level of support, kind of a big shelf of support that you had on this one. They didn't want to let that one go, but ultimately the charts told me it was going to break down, and it did. So there's your breakdown. You know, you really had a sell signal. We're running up for a back test right now. Pretty much another perfect back test right here. So they might pop it a little bit, but I would expect us to fail right in this area, where anywhere from right here to maybe slightly higher. We could even run up to about this level here of 161.08, but I wouldn't expect it to go much beyond that. So yeah, it's objective to add here, in my opinion, and you know, anywhere from there up to about 161.08. I wouldn't want to see it go much above that. And yeah, so I'm still short that one. Again, all these short trades I'm pointing out, for the most part, I am short myself. Qualcomm. So Qualcomm, big negative divergence. That's the main thing on this one. Look at that momentum just dropping off. And each one of these little highs where we're popping, this is a topping pattern where you're running up, popping, making these new little highs, sucking the more longs and bulls in on these rips higher, and yet momentum's just completely dropping off. Essentially what's going on is you've got distribution where you've got the big institutions selling to the retail money. And so that's what's happening. And yeah, we've now broken back below this level of support, which is about 174, 173, 174. Big impulsive breakdown right there. Ran up, back tested, failed. We're below there. Should head lower. Should head down to this 153.51. We'll probably chop around here. The 200 day is going to likely meet up with that and head up, and we're probably going to run into that and chop around here. And then what I see happening is probably a gap down in the future. Might come on the next earnings report, who knows, but a gap down and creating a island cluster top, a big one at that. So we'll see. But next target on this one is this level right here at 153 and the 200-day moving average. 153.50 and the 200-day moving average should run in together. I'm expecting a pretty swift move down there here in the coming days to weeks. Okay, C's, my least favorite short, and it's not working. It's not working out. One reason to not just load up on one position is you're not gonna, nobody's gonna be right on every single trade. This one so far, I don't like the price action. However, we still have a few things going for us, so I want to point it out. I am short, and it's not working. So we do have negative divergence. All right, so this high that we're making right here and now is a divergent high. All right, that's a new high in price right there, and yet momentum is, is still lower than that previous high right there. So negative divergence. Now we want to see this turn down soon. If this keeps going up, we're going to burn through the divergence. So keep an eye on that. You want to see the price start to sell off right around here and keep the divergence where the PPO starts to turn down and the RSI starts to turn down like that. All right, so those are things we'll watch for. If we burn through the divergence, then it's probably, likely we just want to exit this position and get out. We had some near-term resistance right here. This is our former support. We dipped below. We've kind of recovered it. So again, I don't want to see price go much beyond where we're at right here. I'm just trying to, let that be known. So if it goes much higher, I'm going to start to look at areas to stop out at. Give it a little room, but ultimately that's what we're looking at. And we do have negative divergence. Earnings coming up next week. So I think what's going to happen is they're going to miss on earnings. I think this is SeaWorld. Disney hit it out of the park because they were doing pretty good with their parks. I know I just spent a bunch of money there. But SeaWorld's not Disney. All right. Disney is Disney is the top tier when it comes to that. To amusement parks, and it's what all the other parks strive to be, basically. And SeaWorld is not Disney, so I think they're going to miss, or at least miss expectations, and then maybe we get that big move to the downside after earnings. I don't know. We'll see how this goes. So far, not working, so just want to throw that out there. Okay, that's pretty much a lot of those shorts. I mean, and then we'll look at these this long trade, COE. Now, I'm out of this trade. I took all my profit, but this was a trade I called out. I put out in the video on February 9th, so you can go back and watch that video. It was a buy signal, so just the things to point out. You had a big negative downtrend. This is a penny stock, so very speculative, very risky. I always take lower position sizes on these ones, but downtrend line, bullish divergence. See that momentum moving higher? So momentum was moving higher while price was moving lower. That's bullish divergence. We look for a breakout or a buy signal, and we got it right there on February 9th. And from there, it ran up to the first target that I had. So it fell a little short, but the first target was about 230. And from the breakout, from the exact breakout, it ran up about 140% in a matter of, a week about. And, there's some targets up here as well. We could run up and hit that 200-day moving average. So it has the potential to continue higher. I'm out of the trade because, again, I caught it right on the breakout and it just ripped to the upside. So I'm taking the money and running on that one. But I just want to point out, not so much this as a trade idea anymore because it's already started to play out. Doesn't make sense to take the trade here, in my opinion. But I just want to point out the technicals that existed, the conditions that existed on this prior to the trade happening. All right, we look for these things in other trades, and these are the concepts that I teach in my course as well. So take the course if you haven't done so. Link in the description below. It should give you a skill set that you can apply to find other trade ideas and manage your risk. Okay, and I'm just going to wrap up with this LPX. It still looks good for a short trade. The thing that I want to point out, big negative divergence. All right, we've been building that negative divergence for a while, but this was your last divergent high. Trend line right here. So you can see we basically have support. We broke, they chopped it around, recovered it, got real choppy. But look, we're still below the trend line. We're just chopping around. It should reject. It still looks good for a short trade down to this level of support, about 50 bucks. And, I think maybe you just need to give it some room. It gets really messy right around the trend line. As you can see, it's just chopping all through here. Big ripping up days, big down days. But ultimately, technically, the bigger picture says it's looking to head lower once this battle ends. So just want to point that out. I think it does make sense to take a short here, in my opinion. Everything on this channel is just my opinion. It's not financial advice. But you do have to give it some room as they chop this thing around. So, okay, that's all I got for this morning, guys. I'll get this one out here, and I'll catch you on the next one.